Hi everyone, it's Michelle Klippert
I'm Leslie Gore.
and here we are at the real estate store. It is April 21st, 2020. And we are in the middle of still the coronavirus pandemic. We will have things that are for our state, which is Colorado. We're in Montrose, Colorado. We're going to have some things within our state that are going to be a little more lax coming up here.
Yes, in about a week.
In about a week, like agents will be able to show properties again. There still won't be open houses, but we at the real estate store, we still do our open houses via virtual.
Virtual tours we've been doing for what
2 years.
about
About
quite
2
some
years.
time anyway now.
So you'll be able to look through those and still see the things that are happening. But Leslie and I have been in real estate for a while. I've been in it 2004. I think you were even before.
2001.
2001. And we saw during our last recession, we lived through it. We did real estate through it. And it was a very different time. And now at 2020, with this pandemic in place and people out of work, you and I have been seeing some similarities
Yes.
of that market,
Yes.
of things that were happening. The difference is we have some different things that are going on to the public, chatter on, say, like internet, people talking about online. We have a huge online presence, which is very different than before.
Than before. A lot of more. I feel like more government interaction early.
Yes,
This
yes.
time and problem solving maybe because of that they are trying to implement, which may cause confusion.
Well, and I think that's what we were talking about. The main thing is there's a lot of confusion out there.
Yes.
So you're hearing things such as rent deferment, rent forgiveness, no foreclosures being intact, and nobody can evict someone. And this is due to people in every state. Now, we're not the only state, but every state having to be out of work.
Yes.
Because it's essential. Well, they call it essential and non-essential workers. I personally believe everybody's essential.
Everybody earning an income is essential.
Everyone earning income is essential, and the ramifications of them not working, we're not going to see right away. I think we're going to see in our future. But some of the things that people are hearing is a very big concern in real estate and in lending because it's not always the truth. Like what actually will happen.
Yes.
So
nothing's outlined until you're maybe in the middle or too late from it. So we wanted to kind of lay a path, if you will, of what maybe some people will be experiencing, what they can expect, and pick apart what it really means for you.
No, I think that's really important. And the big things is there are 4 words that are out there, 4 words that people really need to listen to. And one of those words is forgiveness.
Yes.
So this is when someone doesn't make a payment or some sense of the payment is completely forgiven.
Yeah.
Like forgiven.
Yes.
And we really, in the mortgage industry, we're not seeing the word forgiveness. Forgiveness has been popping up in different things for legislation, which has not passed, but it's a lot of chatter once again. And forgiveness is like student loans.
Yes.
They're trying to do some different payments that are forgiven in student loans. Another one is there is a PPP loan, and that is for employers to keep their employees together. And I have literally looked at that paperwork, Leslie, and nowhere in that paperwork does it say that it's true that anything will be forgiven. So is there a chance? Yes, they're talking about it. But it's a very low interest loan, and you have to know that going in. You can't think that you're going to get a loan and everything's going to be forgiven.
Everything's okay and gone.
And gone. So that's a word that has been really important in the chatter and things that people who are in a bad way, maybe lost their job, furloughed, or whatever it is, they're having to come across some of this and say, what can I do or what should I do? And the other word for real estate mortgages is modification.
Yes, loan modifications.
Loan modifications. That's very different than forgiveness. So loan modification is when they actually modify the loan. They change the terms of the loan. It could be a more lengthy loan. Other fees may be included in it, because to modify that loan, it's somewhat like a refi, guys. It's like a refinance. And so there may be more charges in there. However, people do try to modify, because many times maybe the interest rate is less now than it was.
Yeah.
Maybe you could cut that payment by, a certain amount, especially if you're not making, much money, or one of the people in the household is not having income.
Yes. If you're a 2-income household.
Right.
And you're so dependent on the one to help make that, the modification can lessen that burden on the one that may still be employed,
right,
or have an income coming in.
So that maturity date of that loan does change on a modification. Many times the maturity, and what I mean is the end of the loan. So if you got a 30-year loan and you're already 15 years in it, and you modify that loan, that may extend that out.
Yeah, they'll tag it on at the back side of that
the
loan.
back side of that loan. So here we have forgiveness that we talked about. We have modification, which is changing the terms of the loan. And the other is a deferment. That word, you have to almost ask, what are the options? Because when you hear a lot of chatter, you think maybe one of these may directly affect you, but deferment is a different type of situation. That's when you don't pay. Now, I've talked to several lenders today, and it really depends on who's servicing the loan. A deferment in one way may be very different than a deferment in someone else's case. So meaning, if you didn't make the payment, would you be able to tack on at the end of the loan additional interest or an additional payment?
The payments, yeah.
But it's not as popular as you would think, because that's probably someone who has a lot more equity in that loan to just defer it out. The other one is when it's forbearance. Now, deferment, forbearance are different. Forbearance is when you're calling and saying, I cannot make this loan. The majority of people may fall in that category and not have a ton of equity in their house.
Right.
And what they stop doing is you actually are applying for forbearance. You would be calling the lender and saying, or who's servicing it, and that's very different. You had said yourself.
Yes.
So who's servicing it, and you say, I cannot pay it. And so they may give you a time frame that they say, okay, you don't have to pay for 4 months, 6 months.
Or even up to a year, they're talking.
Yeah,
in some
even
cases.
up to a year. So what does that mean at the end of that? Like when you come out of forbearance, this is something you actually apply for. You get into a forbearance category. And then when you come out of forbearance, let's say you got your job back and now you can make your payments. What happens is the payments that were behind you that you did not make, the interest that was behind you that you did not pay, come due.
All in one lump.
All in one lump. So if you had forbearance and there were 3 months that you didn't pay, or 6 months, even a year. So think about that. Let's just say your payment was $2,000 a month.
Yeah.
And you didn't pay it at all. And even let's just, for the sense of math, you didn't pay 4 months, and you have then your $8,000 that is due.
Yes. Plus
interest.
And any possible fees that somebody may come up with that may be included in this that you're not aware of. So it may not be as pretty.
Right. And then you come to the end, and let's just say you have your job back, but you're making the same thing you were before. And then you not only have to come up with the $8,000, $10,000, whatever it is, and then you start back on your payments.
Yeah, you did on
your normal payments. Yeah. So what are the chances you're going to have that kind of cash? Or sometimes they'll extend it. They'll say, we'll do a payment plan for X amount of time. But what are the chances, even if it could even double your payment, that you're going to be able to afford now instead of $2,000, $4,000 a month for that same loan.
Yeah, to catch yourself back up to those months you laid off of your payment.
So why is that important to us? Because we hear through the chatter, we hear, oh, I don't have to make that payment. It's going to be okay. I don't have to do that because so-and-so. And there is also, there's a lot of misinformation and there are scams out there. Like you could click onto your email and someone says, you don't want to make your payment, or you really have to be careful and understand what those 4 words mean. What does it mean to you as a family? What does it mean to what's going to happen to you? Because you may need guidance way before you get to the end of the situation on what you need to do.
Oh, absolutely. Yes.
Don't you think that was like the biggest problem? One of the biggest problems was before is that people did not realize
what was happening to them while it was happening. So the reaction came in way behind any timely, any time frame that would have been effective to have saved a home or saved somebody from foreclosure. And there are other options out there, but I think Michelle and I just want people to be aware of the possibility of this being a really bad trap that you could fall into totally unawares, totally with good faith on your part, but until you're really aware of what it could mean, you could be tangled up in something that you didn't
I think you
be.
get into something that you can't climb out of.
Yes.
And so what we're saying is that you need guidance before. I mean, good guidance.
Good guidance, yes.
So to even initiate something when you can't make your payment, the first place you're calling is the lender.
Your services.
Your service, the lender being the service person. So, like Leslie said, if you closed a deal downtown Montrose with I don't know, Guild Mortgage or something like that, they may not be the people you're going to because they may have sold your loan.
Yes, probably your loan was sold on the secondary market. Your servicer is somebody you've never talked to. They don't know you. You don't know them. But the common denominator you and that servicer have is your mortgage number.
Right.
And on your statement is where you will find that number of your loan and a contact number. And you need to call them and speak to them about what may be the best option or fit for your situation.
Right. And how does real estate fit into that? Well, a lot of ways. If you get too far down the line, you may need someone to help you sell the home. You may need someone to help you with a short sale to get out of the situation that you may be in. And it's something, and if you don't know what a short sale is, if you owed more than what your house is worth, is where a short sale would come into play. And how would we know that? Well, it depends on the year that you bought the house. And I gave Leslie an example. I was doing an analysis for some people. They bought one house in 2015. They bought another house in 2018, and they wanted to know the increase in value in both. From 2015 to 2020, that increase, I mean, we had a big increase. We had 27% increase in homes in that time.
Yes.
But 2018 to 2020, there was only almost 6% increase. So if you have the point is this, if you bought your house earlier, you have some time in the equity. Like we could sell the house and you take the money out and you can repay your lender and you can get back on track. Sometimes if you just bought it, you can't get a lot more than what you bought it for. So you're in a different kind of situation. And you may be in a short sale situation, depending on how that works, prior to any kind of foreclosure. And what would that mean for your credit? Well, I talked to one lender today, and he said a forgiveness, like if a actual lender forgave something, which would be much like a short sale, like you owe that much money at one time,
but they'll write it off.
But they'll write it off. So it's like a forgiveness. It still hurts your credit. It still is a ding against your credit. So a short sale does hurt your credit, and it hurts it up to 2 years. but a foreclosure will hurt you up to 7 years. So who would remember all this stuff? You won't. And that's why you need to call professionals. The real estate part, as well as the servicer of your loan part. You need to get the truth in what's happening, because we don't want to see you in a situation that happened in 2008 where everybody just froze. They froze. They didn't know what to do.
Yes, everything was reactive rather than proactive, because people didn't really understand what was coming down the pike. And we've seen it, we've been through it, and we want to maybe ward off somebody getting caught in that bad time trap.
Right.
Like they did in 2008, 9, and 10.
And I think it's a really valid conversation to have, because we know so much more now.
Yes.
We know so much more now. And we're reaching out to you to say, find guidance first. And I mean, even to the point of today, I think Peg showed us another postcard that people are going to be sending you saying, I will buy your house. Like it was a company out of California.
Yeah, predatory.
And it's a predatory type thing. But you're in a situation
that may look good at the time.
It may look, you may look like...
We're all in a panic.
We're all in a panic, and we're saying, get better guidance than that.
Yes.
Find out from your professionals who do that. Find out from your servicer who does that. And again, think about the words when they call you and what those mean and what they mean to you for your future. And that's the biggest thing, is knowing what you're into.
Yes. Yes. We have a good website that you could go to, and it had a lot of information, a lot of some videos and links, and it's knowYourOptions.com. It links back into Fannie Mae and Freddie Mac, who are the big giants in all of this, and know what's going to go on. So again, it's know with a K, K-N-O-W, youroptions.com. And just remember, whatever you think is coming that sounds really good, do not just stop making your payment. Contact your servicer. If you don't know who your servicer is, look up your mortgage statement. And then talk to us if you'd like. We're here to try to offset maybe some of the bad things that happened in the prior recession.
Right. So hopefully this information will be good for you. We'll have some of it online so you can get an idea of what those words mean. We'll have it online for you. Just the more you know. The more you know is better.
We're all more educated this time around.
Right.
And the banks included. So
yeah, exactly. All of us.
It'll all be better.
And even though this is all new territory for our nation, some of the habits are the same. So we just want to make sure that everybody just has a little bit more awareness. So with that, I want to thank you for being a part of Let's Talk for Real Estate. Leslie and I, as well as many of the other brokers, are available to chat with you about that, whether it is helping you get to your servicer or helping you with any other kind of options. So thank you.
Thank you. Stay well.
Stay well.